like, hey, hasn't the Fed created inflation risk again with such a big cut?
Yeah, I love that question. And I think I was contemplating that question yesterday on Twitter and wrote some stuff up. I think the problem is that the reporting of measured inflation. So yes, this path is an inflationary path, unambiguously. The problem is measured inflation takes a long time to show up. And so when you have a circumstance, I think the Fed will be delusional, somewhere between ignoring and delusional around what is going on with inflation, where they'll dismiss, incremental inflation information on the belief that they've largely dealt with the inflation problem and that it's going back to their mandate. And they verbally kind of say the same thing every time. Inflation's going back to our mandate. Inflation's going back to our mandate. It's like, well, what's it going to take? What's it going to take to believe that inflation is not going back to their mandate? I think it's going to be a pretty hard case to be made. And so I think they're probably going to basically reject information contra to their view. And it's going to take a while for it to pick up enough for them to start to, reevaluate whether they've been running the economy too hot. The places where it will show up relatively quickly are places like gold. I mean, just take a look at the market action today. Bond yields are up and gold is crushing it. And so I think, foreign investors might recognize, particularly foreign investors in U.S. bonds might recognize that this is not necessarily, the best monetary policy for them to be pursuing, most prudent monetary policy, and will be shifting more quickly than, the Fed is recognizing that they've given an inflationary impulse on the economy. Look at that chart, up back to highs.
Gold has been the S&P over the last 2 years, up 35% year to date.
Yeah, what's the best major asset class performing this year? It ain't stocks, it ain't NASDAQ, it's gold. Who would have thunk it?
Right.